24 rules for trading. Hi, it's Charlie giving you Saturday's video. I hope you're very well. I was in the trading room in the week, and I said, "Come on, let's put together some rules for trading. Just put it out to the guys who were in the room at the time." And we got to 24 and we stopped. We could have carried on, and so I thought, actually, this is quite a nice little document here to go through for the Saturday's video. So we've got some general rules of trading here, and by all means, like I've said, this is not an exhaustive list. Some things would come under some of these titles. So what we're going to do is go straight in here and start off here with have a trading plan. Know your entry, stop, trade management in advance of taking your trade. Know your rules with regards to everything about your trades, the trades you're about to take, and have a clear understanding of your entire method and approach. There you go. So having a trading plan, number one in there. Now again, these are just all put together. It's just put it out to the group, so we'll just I'll carry on going through these. Have realistic expectations. You can't have high risk rewards on every trade. So again, there's no point thinking in every trade you go into you're going to get a 1 to 10 risk reward, for example. So have realistic expectations. Also accept you're going to have drawdowns, and just because you made 100% one year doesn't mean you're going to expect to make it every year. If you're new to trading, don't expect to be a good trader overnight. It takes longer than you might think. So generally speaking, having realistic expectations there in your trading. Only risk a small percent of your capital per trade. Full stop. Not really much more to say than that. So a small percentage of your entire account balance on any one trade. Don't listen to the news. News can be a form of in the form of TV, newspapers, magazines, market analysts, or Twitter. This can often conflict with your own view, and subconsciously it can impact your trades. If anything, use that information as a contrarian signal, especially when it comes to those market analysts out there, the banks and the likes, because they have a vested interest sometimes to put out some form of analysis which is actually contrary to what their bank actually might be doing. So don't necessarily listen to the news. It can just create a load of noise for you. Again, all of these have just come from our members here when I was doing that session with them this week. Keep your emotions in check. Do not allow yourself to panic and make rash decisions out of fear or greed. Spend time working on your emotional state. So again, a massively important one here, to always be working on your mindset. Be mindful not to get caught up in micromanaging trades. Are you moving your stops for the right reasons or just to make yourself feel better? So a lot of traders will just move their stops because they think, oh great, I can move it to break even, but it may be that they've moved it just a little bit too soon, and then you get unnecessarily stopped out at break even on a trade that would otherwise have gone on to become a winner. Once in trades, look at the higher time frames, not at the lower ones. So an easy trick, once you're in a trade, even if you're a day trader trading and you are trading off, let's say, a 5-minute chart, and once you're in the trade, just change the chart out to an hourly chart. Just desensitizes what you're seeing. If you keep it on a 5-minute chart, you're seeing every little micro move. Take it up and it desensitizes because the moves don't look quite so big when you go onto the bigger time frame. So it's an easy way to not, if you find yourself micromanaging, an easy way is just to, once you're in a trade, is to take it up to a bigger time frame. Use multiple time frames and intermarket analysis for confirmation. So don't use a singular time frame. Look at multiple time frames, look at the trends and the likes, and also intermarket analysis. If you're trading, for example, euro dollar, well, what's the euro Aussie doing? What's the euro Kiwi doing? What's the euro pound doing? Because sometimes you'll see confirmations or non-confirmations by going and having a look at other currencies. But again, that comes down to strategy as well. This is more an analysis thing, that is. Minimize distractions when trading. TV, partners, children's, anything that can affect your decisions. The amount of times over the years that I have come across traders who, they'll sit there and they've got the kids crawling all over them and they're trying to trade. Not the best of moments to try and trade. I know you have to, it's not always easy when you've got a family, but nevertheless, try to minimize those distractions when you are trading. Try and find either an area where you can have some quiet time, or just do it when the kids aren't around or whatever. So try and minimize those distractions, because the amount of people who say, "Oh yeah, I made a mistake here when I did this and there," so don't get complacent. This can be as dangerous as fear, and yet we don't always realize complacency. So, again, that was one that came from a member. Fear is the greatest emotion. Be careful not to allow fear to encourage you to move stops or banking profits too soon. So, again, fear is often the reason why people move their stops too soon. It can be an ego thing as well, because then you can effectively say, well, look, at least it was a break-even trade, so something for the ego as well. But a lot of the time, it's fear-based, and it's the same with banking profits too soon. A lot of the time, that's fear-based. So again, be careful with that. Patience. One of the best things we can do is sit on our hands. Be like that surfer waiting for the right wave to come along. Same with trading. Wait for the trades to come to you. And then once you are in trades, you then got to have patience to stay with them if that's the requirement there. Tenacity. Never quit. Even in tough periods, take a positive from the situation and believe in your process. I'll give you a situation here. I was away last week and I was looking at gold. It was last Friday actually, and it was on this day. It was early on in this day. I was saying to my traders this week, and it was sitting at about 1832 at the time. I'm in my room. We're up in Austria skiing, and I looked at the market. I thought, oh, I really should buy gold, but I couldn't be bothered because I'm in a room. We're about to go out. I've got to work out all my position sizes and everything else, and that's going to take me 15 minutes or so to work out all the position sizes for the various accounts that I trade. So, and I'm on holiday. I couldn't be, so I thought, oh, I can't be bothered to work it all out, I'll leave it. And then, of course, gold then leapt and then has carried on going higher. Now, a lot of traders would get really angry with themselves in a situation like that, or frustrated. Oh, look, I missed out. I could have been up this amount of money and everything else. I really don't care, because it's just one setups in the course of a year. And what I do say to myself is, well, at least my analysis was correct. I'm going to give myself a pat on the back. So take what could be seen as a negative situation, something whereby you get frustrated, and turn it into a positive. So you're not allowing yourself to get frustrated, because frustration leads to bad trading decisions. Throughout the year, take time breaks was another one that we had here. There will be times when you're holding on too tight. Sounds like Maverick and Goose, doesn't it, in Top Gun? And you're best to have a break for a few days to refocus. Oh, probably not written very well here. I was just typing these out as as guys were telling me them. So yeah, take time breaks. Sometimes you might just need to take a couple of days off if you're a very short-term trader, just to have a break, because sometimes it can get intense for people. So it's not a bad idea to just occasionally take a couple of days off outside of weekends. Focus on the setups, not the money. It's easy to look at your P&L, but that can affect your decision making. If you're looking at your P&L in your account, just be careful not to allow that to affect your trading decision making, because we say, oh look, I'm up this amount, or oh no, I'm down this amount, I think I'll just cut it, and then we're making decisions outside of that original trading plan. So focus on the setups, not the money. Let's see if I can get this. It's not working here. Know when the time is right to stop trading or reduce position size. This could be a rule for a number of losers in a day, when you'd stop. So if you're day trading, this rule came from someone who I think was talking about day trading actually. If you have a rule and say, look, well, if I have 3 losers in a row on a day trading, then I'm just going to stop trading, or at least reduce position size on the day. So again, that could be a rule that you could implement in your trading. So again, know when the time is right to either stop, especially with day trading, because the thing is with day trading is that you're more likely to get emotional and then start over trading if you've had a few losers, and then you start trading and trading and trading, trying to revenge trade to make back the losses. It doesn't really happen so much with swing trading, but at any point, reducing position size can be a good thing. If you go into a drawdown, for example, then have a plan as to, well, what point would you reduce position size? So if you go into a drawdown, you can just say, well, I'll cut my position size a bit. Now, if you're using a percentage of capital in your account, then naturally you would, if your account comes down from its peak, then you would be reducing position size naturally anyway if you're using a given percentage. But you might want to actually exaggerate that and reduce position size more if you're going into a drawdown. So have a plan for that as well. Because the reason why you do that is because it could do for many people. They can get more emotional, and also it's just nice to stop the rot, so to speak, and it takes the pressure off by reducing position size. So don't underestimate the power of doing that. Use a fully regulated broker was another one that someone said. So don't think you know what's going to happen next, of course, because there's no guarantees in the market. Doesn't matter how good our analysis or what our strategy is, you still won't know 100% what's going to happen next. Don't chase trades. FOMO is for other traders to use. Yeah, don't chase trades. If a trade's run away from you, then you've got to let it go. Keep a trade diary. It acts as a great self-mentoring tool. If you keep a trade diary and then you do regular reviews of your diary, then it's a great mentoring tool because you can go back over your trades, see what you did right, see what you did wrong, see what actually happened to that market post that trade, and actually it can act as a really good positive enforcement of what you're doing. You have to accept that losers are part of trading. Don't concern yourself with winners. Look at overall profitability. So don't worry about having such a high win rate. Just look at your overall profitability. It's more important. Trade when clear-headed. Don't trade when unwell, tired, or in a mood. You just had a fight with your partner. That's not a good time to then go and be trading. So plus be conscious of how external factors can affect our ability to trade as well. Are there any other pressures going on in our lives which can affect our ability to trade? Don't front run your own strategy. This was another one that came through. Wait for your confirmation rather than jumping in early. It's such a common thing. You have a particular setup and you can see the price is looking like, oh yeah, that's setting up for my particular pattern, so to speak. And you think, oh, I won't wait for it to confirm. Oh, it's going to happen. I'll go in now, sort of thing. And then by the time you've gone in, and then the pattern then disappears, and it doesn't actually materialize, and you've jumped in early into a trade that actually never confirmed the pattern. So do wait. That's a very common thing actually with traders. Be mindful of economic news releases. Again, more so for intraday traders than swing traders, but should always be mindful of, especially the big ones anyway. And then lastly, understanding market sentiment is probably more important than understanding economics. So again, for shortish term traders, economics less important than actually understanding what the general sentiment is in a market. So there you go. We could have carried on. We could have put about 50 or more together, but I said no, that's enough. When we started it, I said, oh, let's just do. I can't remember how many I said we were going to do, but we ended up doing more. So there you go. There's the 24. I don't know what happened to my charts, and it's disappeared up from behind. 24 rules for trading for this week. Hope you have a lovely weekend. I'll see you next week. Oh, where's the thing gone? There it is.